Economic period, especially in agriculture, commodities, export, investment, and entrepreneurship, while at the same time dealing with inflation, exchange rate, access to capital, and change in marketing condition. Well, in this interview, we'll be understanding what Nigeria key is and a secret why Nigeria is taking over in the global market and contributing to the world economy, the current economic state of Nigeria, and how would the economy be, and what are the future for the young entrepreneurs. To help us understand these issues from the perspective of someone deeply involved in the Nigerian business community, I have with me today Mr. Adamu Igambo, FCIISM. He is the president-elect of the Turnaround Management Association of Nigeria, the Northern Coordinator of the Chartered Institute of Export and Commodity Brokers of Nigeria, which is experienced across business development, turnaround management, as we will be discussing the state of Nigerian business investment opportunities, export, and what the future holds for the entrepreneurs and investors. Mr. AA, you are welcome. It is a pleasure to have you with us today.
Thank you, Isa. It's a pleasure having me with you.
Let me start from the bigger picture. From your position and experience across these different areas of the Nigerian business ecosystem, how would you describe the state of Nigerian business and economy today?
Once again, good evening. It's a pleasure being with you. Nigeria is in a stabilization phase, not yet a growth phase. Looking at the inflation, as at 2024, the peak point of this inflation is about 34%, which has fallen to 15.4% in July 2026. The real progress, that is after 2 years of painful reform, the fuel subsidy removal, Naira floated, tight monetary policy under the CBN Governor Cardoso, then our reserves has grown from roughly $34.5 billion in 2024 to over $51 billion. And then the parallel versus official market at the FX gap has essentially closed. But three things complicated the recovery narrative. Growth is narrow. That is in Q1 2026, GDP growth of 3.9% was driven overwhelmingly by ICT, financial services, construction, and not manufacturing or broad-based job creation. Food inflation is also diverging from the rising inflation of 20.3%, even as the headline inflation fell, meaning that an average household is not feeling the disinflation story at the market stores. And access to credit for real businesses remain thin. Private sector credit is only about 21% of the GDP, as compared to 33% of the sub-Saharan African average. With the missing middle of MSSE seeking a loan of 500,000 to 30 million facilities structurally underserved. So, macro discipline has returned and investor confidence is cautiously returning, but the real economy, that is the SME, informal sector, manufacturers, they are still operating in a high cost interest rate, thin credit environment, and so on. So this is in the short note, the perspective of the Nigerian business.
Okay, that was a powerful statement to begin with. Okay, looking at your experience, what has changed most in the Nigerian business environment over the last few years?
The single biggest shift is the move from the managed multiple exchange rate economy to a mostly market determined one, alongside the end of this fuel subsidy. This removed arbitrage economy that used to reward political connections over productivity. But it is also a front-loaded, enormous cost-push inflation onto businesses between 2023 and 2025. The second major shift is the monetary policy credibility. The MPR climbed from around 18.8% in 2023 to a peak of 27.5% in late 2022. And the CBN has held its nerves on tightening even when it was politically costly. Nigerian monetary policy is now a rule-based and less erratic than at any point in the last decade. Third, the cost of doing business has structurally reset upwards. Diesel, logistics, forex, borrowing costs are all permanently higher than 3 years ago, which means businesses that survive this so by re-engineering their cost base, not by waiting for things to go back to normal.
Okay. So what do you think is the biggest challenge facing the Nigerian businesses today?
The cost and availability of capital. With an MPR at 26.5%, and average commercial lending rates well above 30%, formal credit is effectively close to most SMEs, which employ majority of Nigerian workforce. Combine that with the Naira depreciation, risks on any imported input, and businesses are being asked to compete on world market while borrowing at the rate not internationally competitive pace. This is the collective tissue between almost every other problem: inflation, weak manufacturing growth, low job creation. So these are the challenges.
Okay, and from your experience, what is the biggest misunderstanding the Nigerians have about the business and finance?
The biggest misunderstanding is that revenue equals profit and turnover equals wealth. A huge number of Nigerian entrepreneurs run businesses with strong top-line sales, but no real understanding of the margin, working capital cycles, or difference between cash in the account and cash that is actually theirs. That is the unremitted tax, supplier credit, customer deposit, and so on. And then the second misunderstanding is treating debt as free money rather than a cost that must be matched to return. Lending at about more than 30%, effective lending rate, debt taking for the wrong purpose destroy businesses rather than building them.
Okay, I think that was a very powerful point made, and what Nigerians should look up to rearrange and restructure about their businesses and finance. And then, what should an average Nigerian business owner be doing today to protect their business against the inflation and the currency depreciation?
5 practical disciplines. Repricing on the cycle, not crisis. Build inflation adjustment into pricing over 60 and 90 days rather than one painful annual catch-up increase. Shorten the cash conversion cycle by collecting faster, holding less inventory than feeling comfort and negotiating longer supplier payment terms. Since ideal cash is a depreciating asset, then match the currency of revenue to the currency of cost where possible. And since business that imports input but sells only in Naira is structurally short dollars, now hold minimal Naira cash reserves and convert surplus into productive assets. Our inventory dollar-denominated instrument rather than letting cash erode about 15% a year, and diversify revenue away from just a single currency, single market exposure, even modest export earning, act as a hedge against domestic currency.
Okay. So with the interest rates remaining high, what does it make sense like for a business to borrow money, and when should a business avoid debt completely?
Now, at an MPR of 26.5%, an effective commercial lending rate often above 30%, debt only makes sense when the return on the borrowed capital clearly and reliably exceeds the cost of capital, meaning the investment should generate comfortably above 30 to 35% annualized return, with a repayment plan that doesn't depend on optimistic revenue. Now, borrow for a short cycle, then self-liquidating working capital, finance a confirmed order or an import for a pre-sold contract, or for assets that immediately increase productivity, capital, and cash flow. And then there is the need to avoid debt entirely for a long gestation project with uncertain revenue timing, lifestyle, or non-productive expenditure, or to plug structurally loss-making operation. If a business is borrowing to survive rather than to grow, that is safe, an early warning sign. The answer is to fix the underlying operating model, not add leverage on the gaps.
Okay, and what financial mistakes do you see businesses making repeatedly?
To me, there are about 6 of common mistakes. One, no separation between business and personal finances, which destroy real visibility into performance. And then secondly, no cash flow forecasting. So business track profitability, not liquidity, and go under solvency. And then under capitalization at inception, followed by expensive emergency borrowing later, ignoring tax, regulatory compliance until it becomes a crisis. And then fourthly, growing revenue without growing the system. That is scaling sales faster than accounting, inventory, and other management control support. And pricing based on competitors rather than true cost plus margin, which quietly erode margin as into cost price.
Okay, so if someone has 10 million naira today and wants to build a business rather than simply keep the money in a bank, where would you advise them to look for opportunities?
At the current inflation, 15.4%, over 20% for food, then keeping that 10 million idle in a low-yielding saving account is guaranteed loss of real value. I think about it in 3 tiers. One, agro-processing and value addition, such as small-scale processing of sesame seed, cassava, granite, and so, where Nigerian has raw material abundance. And 10 million can fund real equipment, working capital, trade and export, adjacent logistics, aggregation, quality grading, export, and so on. And so on.
Okay, so which sectors of the Nigerian economy? Okay, yeah.
Yes, I'm with you.
Okay, so which sectors of the Nigerian economy do you believe are currently undervalued or underdeveloped?
5 standouts. Agro-processing and manufacturing of Nigeria's own raw material, where enormous value is currently exported as raw material, culture and logistics, and so on. At about 30 to 40%, our solid minerals are being exported raw without processing. And then affordable construction materials, again, housing, deficit, estate, and so on. Renewable energy and upgrade power for SMEs, giving grid electricity contracted around 15.5% in Q1 2026.
Okay. Okay, so Nigeria produces commodities such as the sesame seed, ginger, cocoa, and other agricultural products. Yet, they often export raw commodities rather than finished products. Why do we struggle to move up the value change and change the perspective?
Now, it's roughly about 597 billion naira. That is about 51% of agricultural export earnings in Q1 2026, almost entirely as raw or semi-processed beans, not chocolate or cocoa derivative product. Several structural reasons explain this. Financing is available for trading raw commodities, but not for processing. Since one understands 90-day export contract, far better than factory with 3 to 5 years payback. Power and logistic costs make local processing uncompetitive against processors in countries with reliable, cheaper power. Global buyers and existing trading relationships are built around raw commodity purchase. And important countries often apply higher tariff on processed version. Now, meaning that as a country, higher tariff are enforced on us for exporting processed goods, and then with a very stringent supply terms and conditions, which we cannot meet up. This discourages investment in processing, standardization, certification, and so on. Thus, we are just eroding our values, exporting our labor, and then at the end of the day, we import the process of these raw materials that we have exported. So, meaning that we import joblessness and then we export labor outside.
Okay. So, how can businesses take advantage of the African Continental Free Trade Area?
African Free Continental Trade gives Nigerian exporters preferential access to market of over 1.3 billion people, with a combined GDP of about $3 trillion, practically. Register and obtain a certificate of origin through our Chamber of Commerce, Customs Service, and then actual tariff preference. Since many eligible businesses simply aren't registered, target process, not raw goods, for intra-African trade, where Nigerian comparative advantage is manufacturing capacity relative to smaller neighboring economies. We use the AFTA as a stepping stone market before global export. Since regional demand has lower certification and logistic barriers than EU and then some other US states, so AFTA is a guaranteed investment facility and adjustment from where relevant, along with sector association, NASIMA, and so on. The opportunity is rare, but currently underused. Nigerian intra-African trade remains a small share of total export relative to the size of the economy.
Okay. We all know that Nigeria has like a lot of different regions, and currently we are starting with the northern region of Nigeria. So what commodities from northern Nigeria do you believe have the greatest international export potential?
5 products stand out in this. We have the sesame seed, where Nigeria is among the top global producers, with the North, Jigawa, Nasarawa, Kano, Katsina, Kebbi, Sokoto, Benue as the production heartland, and strong demand from China, Japan, Turkey, South Korea, and so on, rose from about $288 million, that is in 2019, to roughly about $459 million in 2023. So you can see in between 2019 and then 2023, it nearly a growth of about 60%. So making sesame Nigeria second largest agricultural export by value. Ginger, where Nigeria produces about 700,000 metric tons annually, concentrated in Kaduna State and then the other Benue, Nasarawa, Kogi, and so on, with Vietnam, India, US as major importers, and dry split ginger commanding material high prices than fresh. Then granite and gum arabic, historically the pillar of northern export trade. The old granite pyramid in Kano, with gum arabic seeing renewed global demand from food and cosmetic industries, so also pharmaceutical. And Nigeria and Sudan are the world leading sources. Hibiscus and shea nut, both with strong and growing demand in North America, Europe for beverages, cosmetic, natural food coloring, and then of course, cotton and livestock hides skin, where the right processing investment could unlock significant untapped export potential from not traditional value chains.
Okay. So as I said earlier, like Nigeria is struggling with the foreign exchange rate and the inflation and the rest. So I'm currently taking the foreign exchange rate for Nigeria. So can commodity trading realistically become one of the major sources of foreign exchange for Nigeria?
Yes, but only if the emphasis shifts from raw commodity export volume to a value-added commodity trade. Non-oil export already hit a record of $6.1 billion in 2025, which is up by 11.5% year on year. And agriculture is a meaningful share of that. But to matter at the macro FX level, generally diversifying away from oil, which still dominate total export earning, Nigeria needs formalization of currently informal or recorded cross-border agricultural trade, much of which moves undocumented between northern Nigeria and the neighboring Sahel countries. Investment in processing to capture more dollar value per ton exported rather than more tons at raw prices. And consistent bankable trade finance instrument for commodity export alongside reduced multiple taxation and levies along commodity corridors. Realistically, commodities can become a significant complementary FX pillar along oil and services within 5 to 10 years, but they are not near-term substitute for oil at the current investment and infrastructural levels.
Okay. Coming back to another sector of our meeting, you are the president-elect of the Turnaround Management Association of Nigeria. What exactly does turnaround management mean, and why should an ordinary business owner care about it?
Turnaround management is the discipline of diagnosing why a business is underperforming or failing, and executing structured plan, operational, financial, and sometimes strategic, to restore it to viability before insolvency becomes the only remaining option. Turnaround management sits in between normal management and then insolvency or liquidation. An ordinary business owner should care because turnaround thinking isn't just for businesses already in crisis. It is a discipline of early diagnosis. Many Nigerian businesses that eventually fail will have been saved if the owner had recognized the warning signal 12 to 18 months earlier and taken decisive corrective action rather than hoping for the next sales cycle will fix an underlying structural problem.
Okay. And what are the early warning signs that a company is heading towards failure?
Now, there are about 6 recurrent signs. One, deteriorating cash flow despite stable or growing report. A classical sign of working capital or receivable problem, not just a demand problem. Then increase in reliance on short-term and then expensive borrowing to meet routine obligations, such as paying salaries or suppliers with an overdraft, slipping suppliers' payment terms, and rising customer complaints simultaneously, meaning both ends of the business are under strain. Then key staff turnover, especially in finance and operation or management, avoidance of numbers, where financial reporting becomes late, informal, or simply stops being reviewed regularly, and margin compression that isn't being addressed, where cost rises faster than prices quarter. after quarter, which pricing or cost response.
Okay. We just discussed about the signs that a company is heading towards failure. And now, like if you were brought into a company tomorrow, a company that was losing money every month, what are the first five things you will investigate?
The first is cash flow rather than just P&L. Build a 13-week cash flow forecast immediately to understand exactly how much runaway remains and where cash is actually leaking. Then second, gross margin by product or service line to identify which part of the business are genuinely profitable and which are being unknowingly subsidized. Third, the fixed costs base versus current revenue reality. Has the cost structure of rent, headcount, or overhead been sized for a level of business that no longer exists? Then fourth, receivables and payable aging to establish whether the business originating cash because customers aren't paying on time or because supplier credit terms are quietly tightening. And then the fifth is management information and decision-making structure. Who is actually seeing accurate numbers? How often are decisions being made on data or on assumption? And a business in trouble almost always has an information and reporting gap at its roots.
Okay. At first, we already spoke that we are to discuss about Nigeria, and we all know that Nigeria has about 36 states in general. And then out of that 36 states, we are beginning with Kano State. So Kano has generally been one of the Nigeria major commercial states or centers. Like what has happened to Nigeria or that to Kano's position in Nigeria's commerce?
Kano was historically Nigerians and one of West Africa's great commercial and trans-Saharan trading hubs. Kano is the home of one of the oldest markets in the entire sub-Saharan region, the Kurmi market, which is estimated to be more than 800 years. These trading hubs anchored by textile, tanneries, and granite and cotton trade with a deep merchant class. Its relative decline reflects several compounding factors. The collapse of Kano textile industry, once employing hundreds and thousands, decimated by just cheap import. Epileptic power supply is one, and then multiple taxation. Chronic power infrastructure deficit that made manufacturing uncompetitive. And then, of course, insecurity concern across its neighbors and other parts of northern region that raises the risk of premium on investment and trade routes, and broader shift to commercial gravity towards Lagos and other parts of southern region.
Okay. I have heard that in Kano, there is a market that is about 800 years old, which is the Kurmi market. I think this is a very important something for us to go deeper in. But right now, if you had the authority to implement 3 economic policies specifically for the northern Nigeria, what would they be?
First, another industrial and agro-processing corridor policy, targeted infrastructure in power, rail and processing zone linkage major production areas such as Kano, Kaduna, Jigawa, and so on, as processing hub, and then export corridors, prioritizing sesame seed, ginger, cotton, groundnut, and then value addition. Second, dedicated northern SMEs and agri-finance facility, offering a blended concessionary financing specifically for the missing middle of 500,000 to 30 million that mainstream commercial bank lending at more than 30% rate currently exclude, with a strong focus on women and youth-led agribusiness. Then thirdly, a regional security and trade corridor stabilizing program, because No amount of financing or infrastructure investment overcome an environment where farmers cannot safely reach their farms or traders cannot safely move goods. Security investment is itself an economic policy in the North.
Okay. Recently, according to the data, the number of the young entrepreneurs from Nigeria is currently increasing and has reached to a stage. So what financial skills do you think any young entrepreneur from Nigeria should master before going deep into a business or finance?
Cash flow management, specifically the discipline of forecasting and managing cash independently of profits. More Nigerian businesses die from running out of cash, while profitable on paper than from being fundamentally unviable. A young entrepreneur who masters cash flow forecasting, understand their cash conversion cycle, and build the habit of reviewing actual bank position weekly, not just sales figures, will avoid the single most common cause of business failure.
Okay. So finally, what gives you the greatest confidence about the future of the Nigerian business and the Nigerian economy?
Three things, grounded in data rather than sentiment. First, demography scale. A population of over 230 million among the youngest in the world is an enormous long-run consumer and labor market once productivity catch up. And then secondly, the credibility of the current macro reform trajectory. Over 2 years of consistent, if painfully monetary restored some investor confidence, evidenced by reserves growth and then narrowing FX separate. Then third, the sheer breadth of underexploited value chains, from agro processing to solid minerals to services, meaning Nigeria's growth ceiling is currently set by financing and infrastructure constraints, not by lack of underlying opportunities. The task ahead is converting macro stability into a macroeconomic access, credit power, and predictable policy for businesses actually creating jobs.
Okay. So we are rounding up the interview now, and we are together with Mr. Adam Egombo, once again FCISM, and he is president-elect of the Turnaround Management Association of Nigeria, the Northern Coordinator of the Chartered Institute of Export and Commodity Brokers of Nigeria. And we have had enough, and if there is enough time, we could have discussed a lot of things, and we could have go deeper and even much more deeper in the Nigerian economy sector, finance and investment. But with all we have discussed, I hope you have understand a little bit or even much more about the Nigerian economy, the Nigerian businesses, and especially the northern business, especially the Kano State business and how it was before and how it is now. And also this will serve as a key for young entrepreneurs trying to go deep into business and not having enough knowledge or enough experience about what the entrepreneurship is all about, what's about finance, and also the Nigerian economy system. And we have also discussed about the interest rates and also the foreign exchange rate of Nigeria, which is one of the key factors affecting the economy of Nigeria. We all know that Nigeria is currently dominating the world economy and is also listed among one of the states in the future that will take over the world economy. So I hope with all those answers you had from Mr. AA, you will understand much more deeper about the commodity, about the export, about the investors, and the business development and other opportunities of Nigeria. And what I would like to highlight is, based on what I've understood, is the Nigerian economy is much more beyond what is currently listed or according to the data. Due to all the answers I have had, I just understand that especially when you mentioned about the Nigerian reserve, which you said it's about the $3 trillion. which wrote to me thinking about the economic situation of Nigeria, and thinking that there will be better and much more opportunities in bringing lifting the economy of Nigeria. And once again, thank you all for watching, and thank you all for having us. And once again, I'm Isa Adamogambo. Thank you all for having us today. Thank you.
Thank you so much. Thank you for having me.